All right. Hey, guys. Welcome. Greetings. Welcome to the SILA Foundation September webinar, Navigating the Post-COVID Insurance Landscape. I'm Cindy Davidson, the Education Trustee for SILA Foundation, and today we are delighted to be hearing from three presenters on how the coronavirus pandemic has impacted and transformed the industry. Go ahead and move to the next slide there, Fred. This session is hosted by the illustrious Fred Karlinsky, who many of you know as the legal advisor to the SILA Board and the Regulatory Relations Trustee to SILA Foundation Board. Fred is co-chair of Greenberg, Traurig's Insurance, Regulatory, and Transaction Practice. He has nearly 30 years of experience representing insurers, reinsurers, and a wide variety of other insurance-related entities on their regulatory, transactional, corporate, and governmental affairs matters. Fred has extensive knowledge of insurance compliance matters and Florida insurance-related legislative and regulatory initiatives. Fred's widely recognized within the financial services community, is listed in the best lawyers in America, and has been recognized as one of Florida's 100 most influential people in state politics. Fred's chaired the Finance and Tax Committee of Florida's Constitution Revision Commission, currently chairs the Florida Supreme Court Judicial Nominating Commission. He's also adjunct professor of law at Florida State University College of Law, and he's one of the most unselfconsciously funny presenters you'll ever get to hear. So we're certainly happy to have you here with us today, Fred. Next slide, we're also welcoming Diana Ivey, Senior Vice President, Lead Compliance Officer for Marsh U.S. Risk and Compliance Organization. She provides leadership and guidance around insurance regulatory matters in the U.S. and is a subject matter expert on insurance licensing, conflicts of interest, outside directorships, and third-party providers. A native New Yorker, Diana graduated from NYU and has a Master of Public Administration. She served on the board of the Association for Healthcare Risk Management of New York and currently serves as communications chair on SILA's board of directors. And if you've listened to any of the SILA Speaks podcasts, you already know you're in for a treat. Third panelist is Greg Thomas, Director of Insurance and Agency Services and Consumer Services in the Florida Department of Financial Services. His responsibilities include licensing and oversight of all insurance agents, agencies, and adjusters in the state of Florida, as well as investigations and consumer complaints. Greg's a graduate of Florida State University, has earned multiple professional designations, including the dreaded Chartered Property Casualty Underwriter, CLU, and FLMI. Greg has 34 years of experience in insurance, including 6 years as an agent and 28 years as a regulator. In fact, yesterday I was researching enforcement actions in Florida, and I kept seeing Greg's signature popping up on consent orders, license suspensions, and revocations. So I think it's fair to say he helps catch all the bad guys in Florida. Allow me to pause and acknowledge Fred's firm, Greenberg Traurig, for being our September webinar sponsor. SILA Foundation recently opened up these webinars to sponsorship. We're super grateful to Greenberg Traurig for stepping up, helping to keep these webinars free for our attendees. If your firm might be interested in sponsoring a future webinar, just let us know. There's only one more spot left for 2020. And now we get to read our antitrust statement. Sorry, I'm talking so much. SILA and the Securities and Insurance Licensing Association is committed to compliance with the letter and spirit of the antitrust laws. Topics that present antitrust implications should not be discussed. Meetings conducted under the auspices of SILA are designed solely to provide a forum for expressing various viewpoints on topics described in the program or agenda for such meetings. Under no circumstances shall SILA meetings be used as a means for competing companies or firms to reach any understanding, express or implied, that restricts competition. Conference and chapter meeting leaders, MPs, panelists, and moderators have been instructed to stop any conversation or discussion related to restraint of trade, price fixing, compensation, reimbursement, rate settling, marketing strategies, and any other topics that could be considered anti-competitive. SILA would appreciate its members, speakers, and guests to conduct themselves accordingly. We have about an hour. We hope to leave a little time at the end for questions. Feel free to fill out your questions in the Q&A. But for right now, I'm going to turn the session over to Fred, and I'll be back at the end to wrap us up. Fred, it's all yours.
Well, thanks very much, Cindy. Glad everything's going well with you. And thanks to the SILA team, Diana, Mary Kay, and Mary Ellen for helping us put this together. I'm pleased that our firm was able to sponsor this. As Cindy mentioned, I've been intimately involved with SILA and the SILA Foundation for a long time, and so are Greg and Diana. And I think for those that are involved, I think you're getting a lot out of SILA. For those that aren't, you should be involved because it's a great organization. And I think coming up later next month, we've got the conference, the virtual conference, first time ever, that I think if you're not signed up for, you'll get quite a bit out of. So hopefully you can do that in addition to listening to the rest of this webinar. So thanks again for that kind introduction, Cindy. I was the one that asked for the antitrust statement in there, and I'll also go through this disclaimer with you. Just because I'm a lawyer, I like to make sure that folks realize that what we're talking about here isn't specific legal or regulatory advice. To the extent you need legal or regulatory advice specific, a lot of you are clients of our firm. Feel free to call your in-house counsel or call your outside counsel. But certainly this is more general in nature and should be taken in that spirit and listened to in that regard as well. So again, I would just want to thank everyone for joining us. Our world has obviously been upended by COVID, but I think we've got a good discussion today about where we are and where we're going. And I hope at the end that we do have time to answer some questions or at least have some dialogue between the three of us, because there's a lot of different perspectives here, right? On one hand, you have me representing as an outside counsel, representing a number of companies, including Diana's companies, the Marsh McLennan Companies, before insurance regulators, in boardrooms giving advice, to officers giving advice, and others. You've got Diana, who comes at this from an in-house perspective and one that's from an important perspective because of Marsh's position in the marketplace. And lastly, and probably most importantly, you've got Greg's perspective as a regulator. So I think the regulatory responses that we're going to talk a little bit today regarding COVID are important. The business perspective on regulatory responses, and then the future regulatory and operational impacts of COVID are all going to be discussed today. So as I just mentioned, we're going to first start to talk a little bit about what's going on regulatory-wise. The state regulatory responses to the COVID-19 pandemic have been varied across the country as state and local governments began issuing varying degrees of orders requiring businesses to close and people to shelter in place, a term I had never frankly even heard before, or even social distancing for that matter. Regulators were forced to think on their feet to make sure insurance consumers and customers were served and the insurance industry can function. Realize that not only are the insurance consumers customers of departments and groups like Greg's, but also insurance companies and agents are consumers of those organizations as well. While some states passed some legislation, others and most relied on emergency orders or executive orders. Regulations across the country focus on helping policyholders by making sure that policies were not canceled during the pandemic, that policyholders received some form of premium relief where appropriate, whether in the form of payment accommodations or even rebates, and there were the creation of certain presumptions of coverage, all of which we'll talk through a little bit more during the webinar. Some of these regulatory actions, like mandating rebates or creating presumptions, could undermine the actuarial and market assumptions used to establish rates for the particular products they're dealing with. That is, if you by fiat require something to be covered that's not otherwise rated for, i.e. charged for, if you will, it really undermines the rate making process. And therefore it impairs the assumptions which could have downstream impacts on the financial status of insurers. I know there's been a lot of talk about BI and how that would all work out. This is an issue that we're going to ultimately have to monitor over the course of time because it's not something that ultimately plays out either intuitively or very quickly. A lot of what's going to happen is going to go through the court system. And now I'm going to turn it over. It was mentioned earlier that Greg's had about 30 plus years in the industry. I think I've known him for just about most of that time. Fortunately, all those orders that were talked about are not orders that are signed by him on, against folks that we represent, but we've worked closely together over the course of time. Greg's going to talk a little bit about producer licensing.
Thanks, Fred. I appreciate that. And I don't know, Mary Ellen or someone, there's a clicking noise going on in the back. I see that in the Q&A, and it would likely be one of our group here. And I'm sure it's not Fred because iPads don't tend to click. So, and mine was muted, so maybe it's one of the two of you. But in any event, moving into the slides today and talking a little bit about what has happened in Florida to date. I'm going to start with painting a quick picture of the process, which is pretty consistent in most states. I mean, Florida's a little bit different in that we require fingerprints for almost all of our applicants, even the non-residents, whereas many states don't do that. But in order to get a license here, the vast majority of the licenses that we issue require a series of things. They're going to require that you complete a course that is directly related to the license that you're seeking. You're going to have to submit an application, pay the appropriate fees, get fingerprinted. We will then conduct both an administrative history and criminal background check on the person. And then the person must pass the state exam. And so in a normal year in Florida, we license anywhere from 100 to 130,000 new applicants. That's pretty normal. During the COVID time window, since we've actually moved to fully telecommuting with my staff, we have received and processed approximately 60,000 applications. That's in the last 6 months. So we haven't slowed down really as far as the inflow of applications. It's been pretty steady, but there was a problem early on in the process with regard to us being able to complete the process entirely. We could do our part because our part is fully automated. Florida's been automated in its business processes for over 15 years. And so that's the application and everything. And so our staff is able to work them remotely. The challenge that we had was fingerprint and testing. So our fingerprint vendor shut its sites down and our testing vendor shut its sites down. The fingerprint vendor, fortunately, was able to get back up and running relatively quickly. So that was a very short-lived concern. It only lasted a few weeks and we were back in business. And we never really lost every single site, but we lost the vast majority. So after that piece was dealt with, the only real hangup we had in trying to issue licenses was examinations. And we knew that we have a very high volume of exams. And we knew that there was a building queue, if you will, of individuals who were seeking licenses. I was getting lots of calls from concerned companies worried that they couldn't get their applicants through and they were having more of a demand due to COVID for insurance products. So they were seeking a mechanism to get folks licensed, and stepped in the CFO and he issued a couple of directives to deal with some of the concerns that were out there. And the biggest of them, as far as the impact on the licensing process, is he allowed for temporary licenses. I would refer to these pretty much like an apprentice license. So what the temporary license did, or what it allows for, is it would take a person who has completed all of those steps that I just outlined. They've gotten fingerprinted, they've applied, they've paid their fees, they've taken their course. But the one thing they haven't been able to do is take their exam. And it would allow that individual to go ahead and get a license. But that license we deemed a temporary license. It was valid for only 6 months. And the executive order that the chief financial officer wrote specifically limited those individuals and required that they work under the direct supervision of a fully licensed agent holding the license and appointment for that particular class of insurance that they are attempting to sell. We have issued between 12 and 15,000, I haven't pulled a count in the last few days, of those temporary licenses. And so that process has been working very well. and people are transitioning relatively quickly over into the permanent license because the exams are available. That's one upside to where our process has been, is that our testing vendor has since been able to rectify many of the problems. We've opened a bunch of additional sites, and we actually, in the most recent 3 months, June, July, and August, that have been completed, we actually tested more people in Florida, almost 1,000 more this year than we did in 2019. So we're doing really well. We did have that lag for the earlier months, starting back in March, and in September we're ahead of schedule again. So I anticipate that working with our vendor, we will probably equal or exceed the number of tests that we conducted last year. So on the temporary licenses, when we did that, we really laid out 3 types that we were going to allow to get those licenses. We used the life and variable annuity license, a health license, and then a personal lines property casualty license. And those 3 license types would allow an individual to sell the basic products and to work with an agent and begin learning the business process. So that was really the goal that was set out there, because what we were hearing is we have new candidates, new potential licensees who are new to the industry, who are wanting to get started. And we figured this was a good way to accomplish that. And in many conversations with CFO Jimmy Petronis, he thought this was a good idea. He's a businessman by trade, and he really did not want us to be an impediment to business continuing as it should in the state. And as we all know, insurance is a key part of everything that we do, and it was deemed an essential service. So our insurance agencies remained open during all of this time. Now, they did things in a little bit different ways sometimes, but they actually, as we've gone through this process, these insurance agencies have, like we have, figured out ways to continue to perform their business, most of them remotely. So the department has taken its operations, and we are almost exclusively working remotely. I'm speaking to you from my home today, and I have a staff of approximately 200, and on any given day, I have no more than 2 or 3 staff members that are actually in our office. The rest of us are working remotely. And what we have found, as I've talked to insurance agents around the state, most of them are doing the same kind of thing. That posed a little problem, though, at the beginning, because Florida's got one unique property casualty license that actually, by statute, requires the individuals to work inside the insurance agency. They're not allowed to work in the parking lot. They're not allowed to work from home. They're not allowed to work from a different office of the same agency. They have to work inside the office that they have designated as their office. And that was a problem, obviously, with COVID, and many of those individuals were concerned about health, and their agency owners were as well. And so the CFO also issued an order which waived that physical presence requirement and allowed those individuals to work remotely. That is tied to our governor's executive order creating the state of emergency related to COVID. And our order that CFO Petronis issued will run along with the governor's order of state of emergency for as long as that runs. So currently that is through early November. The process has worked well. Like I say, we've not had any concerns. I've not had any investigations that we've had open against a temporary agent yet. So no issues have popped up from it. Producer operations seem to be running relatively smoothly as best we can tell. We're also not hearing anything out of the ordinary there. So it seems that industry has found a way to make life work in this COVID environment as well. There were a couple of other things that have happened as a result of this. So insurance companies often require inspections for certain things, i.e. the binding of coverage and or adjusting of claims. And as the regulator of those individuals, what we've seen is most of the insurers have given direction that has changed the process a little bit. So they've tried to create some social distancing methods. They've tried to avoid going into homes where they they could do that. And so that's changed the landscape for insurance a little bit as well. We'll have to see over time if that change in inspections is going to have created anything negative. The same is true for adjusting with going into a home. Many times you have to do that. So there's extra protections that have to be done, and that is affecting things. We've just been hit by Hurricane Sally here, and so we're going to see how some of these measures play out, I guess, over the next little bit, and hopefully all the health and safety concerns that everyone has will not be compromised as a result of this storm and the adjusting that has to happen. I know that it's impacting our decision making as far as what we're going to do in the short term, because we tend to, Florida has, and I don't know if other states do this, I'm sure some do, but we have what we call insurance villages here. And what we do after a storm is we'll set up an area where consumers can come to meet with their insurance companies, and we bring all the insurance companies into the same location. But at this point, we haven't decided to do that, and COVID is the cause. Otherwise, we probably would be, I would not be with you today. I would be on my way to Pensacola to set up an insurance village. So, other issues that have popped up during this time are workers' compensation. So CFO Petronas also regulates the workers' comp process in the state of Florida, and also oversees the state employees and government employees workers' compensation self-insurance program. Early on, he issued a directive which basically says that a person who is an employee of the state and is tested for COVID-19 and it's determined that their disease came from, or is even, it's questionable that it came from or could have from a work-related exposure, that will be deemed a compensable claim and an occupational related disease, so that it would be covered under workers' compensation. So what that did is created, I guess, a little bit of comfort for our first responders, our correctional officers, state employees that are in the healthcare field and nursing homes. It created that bit of safety, and includes the National Guard, which is out there right now dealing with Hurricane Sally. So it's a very important move that he took to try to create some level of comfort there. There was also an order by our insurance commissioner. Florida's a little different in the way that we do insurance regulation. We're sort of bifurcated. We have a chief financial officer who oversees certain aspects of insurance regulation, and an insurance commissioner who oversees other parts of that. So I'm going to turn it back over to Fred and let him talk a little bit more about the workers' comp piece.
Thanks, Greg. I appreciate that. And yeah, those insurance villages make some of us, I guess, become village people, huh? There you go for the comedy that Cindy had promised you in that regard. So in any event, as Greg did point out, though, and interestingly, and just a little tidbit, the way Florida works as far as financial regulation, you've got the Department of Financial Services, which oversees certain things, including but not limited to Greg's department, as well as consumer services, as well as rehab and liquidation. And then you have the Office of Insurance Regulation. The DFS is overseen by CFO Jimmy Petronas, who Greg works closely with, and who frankly is in the affected area of Sally right now. So he's dealing with that firsthand, and I'm sure he's going to have his own village, if you will, over there in terms of handling claims. But our Office of Insurance Regulation since 2016 has been overseen by Commissioner David Altmeyer. And Commissioner Altmeyer and CFO Petronas work hand in hand, and in that regard, Florida's OIR issued a memo 2020-05M reminding Florida's workers' compensation carriers that Florida law requires coverage if the employee suffers a compensable injury out of work performed in the course and scope of their employment. This was a much softer regulatory response than we saw in other states, frankly. Other states, like we'll see in the next slide, took a much harder position. And in fact, there were a few states that took the position I'll talk about in a second, but most states took a position similar to what Florida's position was, which is a very deliberate position and allows the market to function as intended. So California, where Cindy is, took a different approach. California Executive Order N-62-20 created a rebuttable presumption for all California employees under certain conditions that COVID-19 is a compensable injury under California's workers' compensation system. The diagnosis must be made by a doctor, the diagnosis of COVID, and confirmed with a positive COVID-19 test within 30 days of the diagnosis. To take advantage of the presumption, a worker must have been diagnosed within 14 days of being on their employer's job site, having performed work at the direction of their employer. The work must have been performed outside the employee's home and have occurred between March 19th and July 5th. This is clearly on the other end of the spectrum from Florida's actions. The presumption could apply to an unknown number of claims. Insurers and producers will have to try to get clarity in complying with this order. No doubt policyholders will be looking for guidance, and litigation is inevitable. So the bottom line is that's a much different approach than the approach that some states took. Some states took a presumption approach, others took a much different approach. One of the most apparent impacts from COVID-19 has been increased access to telemedicine. And that probably is one of the good things that came out of COVID. Telemedicine was something that was starting to become a lot more mainstream, and COVID only enhanced the time frame that was going to happen. States have taken different approaches to telemedicine, but some of those changes seem as if they're going to be permanent down the road. Delaware and New Jersey, among other states, have adopted legislation creating permanent provisions of law to enhance access to telemedicine. Delaware's House Bill 348 was enacted on July 31st. Among other provisions, the bill removes Delaware's requirement for a patient to see a provider in person prior to being eligible to receive telemedicine services. New Jersey's bill is far more expansive. The bill requires health insurers to cover and deliver telemedicine. Other states, for example, Louisiana, issued emergency rules providing access to telemedicine during the pandemic. Louisiana's Emergency Rule 37, which was issued in March of this year, required all health insurers in Louisiana and included HMOs, MCOs, PPOs to waive any coverage limitations that may have been in place, restricting telemedicine access to providers. It also required that there was a waiver of any requirements that the patient and the provider have a prior relationship. So you could have a new relationship in Louisiana based exclusively on telemedicine. Insurers in Louisiana are also required to cover telemedicine for mental health treatment, which is a big deal right now, and to waive any requirement limiting coverage to provider or provider consultations only. So Louisiana went pretty far in that regard as well. Patient access to prescription drugs received a great deal of attention during the pandemic from regulators. That's very similar to the kind of attention that is shown to prescription drugs during, say, a situation like we're having in Florida now with Sally or the wildfires that they're having out west. In Colorado, the governor instructed the Colorado Division of Insurance to issue guidance and direction to Colorado's health insurers regarding coverage of COVID-19 claims. There was a bulletin that provided direction for health insurers to cover additional one-time only early refills of any necessary prescriptions. Nevada issued a order that, or adopted a regulation that required insurers to cover prescription drugs that were not previously included in their formulary of the particular insurer. Additionally, the Texas Insurance Department issued Emergency Rule 2020-6305, which prevented disruptions in access to prescription drugs by allowing early refills, out-of-network pharmacies, and home delivery also. We're all really familiar with the lockdowns, the shelter in place. As I mentioned, I hadn't heard that phrase before, and the safer at home orders that were out there. One of the impacts of these orders was that businesses were converting to remote work. As Greg mentioned earlier, His department with 200 employees only has a few people in the office. My firm, which has about 4,700 employees worldwide, at the height of the lockdown, we probably only had about 100 employees in all of our offices worldwide. There's also data that indicates that the people that were still driving during the time were speeding because the roads were empty. So Alabama issued an order that urged auto insurers to offer reductions in premiums to reflect the reduced exposure. As I mentioned, that exposure may or may not be reduced because of things like people speeding for whatever reason, I guess because the roads were open, because people weren't going to work. Many state regulators decided that automobile policies needed premium relief due to the reduction in exposure from the lockdowns. We talked about Alabama a second ago. California, and Alabama's order was, more of an urging, which is what a lot of states did. California, on the opposite end of the spectrum, issued an order in April of this year ordering carriers to provide premium refunds from March and April to all adversely impacted California policyholders. Again, Maryland took a different approach. Maryland Bulletin 20-18 allows policyholders to effectively and affirmatively request a premium modification for out-of-service vehicles. So there you see on the premium relief side and on the workers' comp presumption side, and just generally speaking, different approaches as they relate to COVID reactions by insurers. So talk a little bit about the COVID regulatory response from a business perspective. And to do that, I'll turn it over to my good friend who I've worked with for many years now as well, and who's intimately involved with SILA, as was mentioned earlier by Cindy. She hosts the SILA Speak series, which I had the privilege of working with her on. Diana Ivey will talk a little bit about what's going on in the business community. Diana?
Thanks, Fred. So, I want to talk a little bit about our experience during this COVID pandemic, these certainly unique times. So obviously, a lot has changed for our industry since March. The way we work, the way we communicate, and even how we get qualified to be in or, stay in the business of insurance. So I think it's safe to say, probably most of us would agree that probably most of us had high hopes that this would all be behind us within like a month or two, from the onset, and that we would revert to normal. But here we are, right? 6 months later, we're still dealing with the issues of the pandemic. So what we thought would be temporary adjustments may very well turn out to become permanent changes. Maybe not all of them, but probably many of them will. If anyone's familiar with the proverb, necessity is the mother of invention, our response to this pandemic has shown the creativity and the capacity for innovation and the resiliency of our business. So when I say our, I mean the collective whole, not just my firm, and including our regulators and our industry members as well. So the need for us to shelter in place is competing with the need to continue to serve our clients and insureds, many of whom were adversely impacted by the lockdowns. It required rapid and significant adaptations in how we work and how we communicate. And in some ways, we, the industry and the regulators alike, were forced onto the express train to modernizing our business. So I want to share with you some observations or perhaps some takeaways just garnered from our whole experience. And the first angle I'd like to discuss with you is technology. So first and foremost, I guess if I had to summarize it, it would be technology rules. That has been proven through this whole ordeal. Hands down, without modern technology, it would not even be possible to provide seamless and timely service to our clients and to our insureds. Leveraging alternative and more modern modes of electronic connectivity such as Zoom meetings and such as the platform we're on today, keeps us all safe from contagion, but still keeps us connected, at least visibly and audibly. So for the business, virtual meetings have become the norm. At least, nowadays it's the norm. Meetings with clients, meetings with staff members, attending educational conferences such as the one you're participating on today, and as Fred mentioned, the upcoming SILA conference, all are now being handled virtually, which is something pretty new. Even the NAIC conference went virtual for their summer meeting and will be virtual again for the fall meeting. So the reliance on this type of technology has become invaluable and absolutely necessary. For producers, the industry and regulator collaboration gave birth to important licensing relief measures, and both Greg and Fred have mentioned many of these already, such as innovations that came about, remote examinations of in first-time licensees, online continuing education, the waiving of proctorship in some cases. All these things enabled either new producers to become licensed or existing producers to maintain their licenses in good standing so they can continue their good work and serving the clients and consumers and insureds who need their services. And sort of as an added benefit, as a result of these changes, really is for displaced workers. So virtual licensing exams in particular really could provide a great new opportunity for somebody who has lost their job as a result of a shutdown or the pandemic itself, just creating a potential for a new opportunity for somebody who needs to regain some work. But for all of this increased reliance on virtual conduct of our business, it's also, we've seen an increase in cyber risk exposures for companies. And most notably, the majority of the risks are stemming from the increased remote workforce. We've all mentioned, both Fred and Greg mentioned that their workforce is currently primarily remote and has been since the onset. And that's true for my company as well. We are a company globally of many thousands of colleagues across the globe, and across the globe we went remote almost entirely, and it continues today. So it's been an extraordinary adaptation to the way we do business. The next area I want to talk to you about is around communications, and I think in particular, of note, it really, I think we can highlight the role of the broker or the producer remains key. For clients and insureds who've had adverse impact by the pandemic, their brokers are there to help them understand their insurance policy coverages and exclusions. Especially we've seen this around business interruption caused by the pandemic. And the brokers are also there to be an advocate for them around claims, to help them to understand, what potentially they can or can't expect. Clients and insureds have also turned to their brokers for clarity around various pandemic relief measures that have been issued, such as the ones Fred and Greg mentioned around premium relief or policy cancellation avoidance. Many of these types of relief measures have been addressed by almost every state, and there have been various bulletins and communications put out, and many times the clients and the insureds need help understanding what's available to them, and the broker plays a key role in helping them with that. The maintaining of open lines of communication with our state insurance regulators has also been key. Having those open lines of communication with our regulators has helped to promote some of the necessary adaptive measures that we've seen take place. This pandemic highlights the commonality of our collective goals, which is for the regulators and for us alike. It's to protect and to serve our insureds and clients above and beyond everything else. So staying on top of the many orders and directives and bulletins and other guidance that has been put forth by all of the states is very key. For the business, having a way to track and analyze all of this communication, and to be able to make sure the brokers understand it has been invaluable for helping them to serve their clients and their insureds. Okay. Also, we've seen, the many challenges of adapting to remote work for, both as an employee and as a manager, perhaps. There's, challenges on both sides. For some people, just kind of finding a new routine in their new work environment has, been a little bit of a challenge. And for managers managing teams or staff members, it's hard, when they're not all in one place, they don't see each other every day, that presents another set of challenges. But through it all, I think the key really has been keeping it human. For many, being comfortable and casual in their own homes has proven to be a great thing, increasing productivity. But for others, maybe not so much, for a variety of reasons. But for most people, I think it's fair to say there's nothing better than real human contact. But under the circumstances, having the ability to do, visual and audio, in addition to being able to hear people on the phone, being able to see them on your computer is probably the next best thing to having real human contact. So I think in some ways it's been really key to helping alleviate the isolation that many of us feel as a result of the pandemic and the lockdowns. So to help keep colleagues and staff morale and engagement up, some of the key things, I think anyway, that have been helpful have been to, embrace the entire person. Your employees are their people. They have homes, they have families, they have pets, all of it. Embrace all of it. It's kind of fun seeing the cameo appearances by staff members' children or pets or spouses. It's really kind of fun to be able to interact with them in that kind of intimate way. Also having regular or establishing regular communications, since you can't just walk down the hall and stop in and say hi to somebody, just establishing a regular rhythm of communicating with your folks, with your staff members has been very key. And leveraging video when possible is always helpful too. Again, that kind of alternative face-to-face interaction has been really helpful and really fun. Encouraging people, amazingly, encouraging people to draw the line between work time and personal time is necessary. What we found is for many people working from home, it's just so easy to continue working into the wee hours because you don't have anywhere to go. But we want to make sure that we remind our people to, strike a healthy balance, keep a healthy balance, take time for yourself and, refresh and recharge, and just kind of helping people remember to do that, I think is important. Also being aware of extra burdens that, many people have. The working parents, I really feel for those who have to homeschool children and work from home. That cannot be an easy thing. So, providing flexibility, being patient with all of that is very, very key. Also, same thing goes for your employees who may be functioning as caregivers to, the elderly, their, aging parents. That is certainly an issue as well. Other issues just to note, as far as licensing goes, this pandemic, at least in cities, I'm in New York, so I don't live in New York City. Thankfully, I'm not, I'm in a very safe kind of outside rural area. Lots of space and open air, so no issue. But for people who live in cities, naturally, many wanted to flee that crowded environment. And so many have gone to either second homes, whether in the same state or in other states, or have gone to stay with family in other states or, perhaps in the same state, just to get away from the crowds and all of that. So I think the impact of that, we're going to start to see, if we haven't already, an increase in movement of our licensees, our producers from state to state. We always have a lot of that anyway, but I think we're going to see that increase quite a bit. I think the other thing to be aware of, individuals and employers alike, is for people who are perhaps transitioning on a temporary basis. It's turning out to be kind of a long temporary basis. So they need to be aware of state taxation implications that may impact individuals or the employer themselves for situations like that. So it's just something to keep in mind. Next and lastly, I just want to turn to business resiliency. Obviously, business resiliency planning and management is a must. I think it's safe to say that most firms have some kind of business resiliency or business continuity plan already in place, especially since 9/11. There are so many risks that could cause a firm to activate their BCP. I'll call it the BCP plan for short. A pandemic is really just the latest example of something that would trigger it. At the outset of the pandemic, actually, the Florida Department issued a bulletin around a BCP plan. It was memo number 20-030. And in that bulletin, they were directing companies, so anybody regulated by the Florida Insurance Department, any firm regulated by the department, they were directed to update their BCP plan and to make sure that the plan provides a framework for a continuation of company operations, including key insurance functions like policy issuance, premium collection, claims adjustment, payment and policyholder service, and as well as CDC and Department of Health guidelines that were being published or that are being published. The department also required all entities that were regulated by them to immediately notify them if they activated their plan in response to the COVID-19 crisis. On an ongoing basis, a business continuity plan should be updated to ensure that it continues to address the firm's ability to anticipate and respond to potential crises stemming from a broad range of hazards and risks, including pandemic and other emerging risks. It's really super important to stay on top of emerging risks, have an awareness of what's potentially a new risk, and then incorporating a plan for that in the BCP. Just to be brief about a BCP, what the basic elements of it should absolutely contain a prioritization of business functions or operations, determining what is critical and what doesn't need to be reinstituted immediately. Excuse me, understanding what resources are available and what capabilities are available, and determining whether additional resources need to be added. And then finally, establishing a team, an actual BCP response team, designate members to be part of that team, and these members would be trained and they would rehearse implementation of the plan and make sure that this plan would get updated timely and regularly. Regular evaluation and adjustment of the plan is key. And with that, I will turn it back over to Fred.
Well, thanks, Diana. And certainly when you were speaking, thinking about the human elements here and thinking especially about cyber, those are all big issues that I think we're going to be addressing for some time now. And in that regard, the stay-at-home orders and the mandatory business closures that were implemented by state and local governments around the country really did impact small businesses and large businesses and individuals alike. There's a lot of lost income and there's a lot of incursion of unanticipated costs for American businesses. These have been felt in the travel industry, in the entertainment industry, hospitality, and in the retail industries. Pretty much all industries have been affected. Many business purchase business interruption coverage along with their commercial insurance policies. Many are now seeking coverage for losses covered by mandatory business closures ordered to curb the spread of COVID-19. There are a number of states that are considering legislative action in that regard, Massachusetts and New York being just two of them. I think what we're going to find is that this is going to be an ongoing debate and discussion for some time. And while a number of the state legislatures got cut short this year, in large part, if not exclusively because of COVID, I think you're going to see this issue of whether BI should have been covered or should be covered, or how it's going to be dealt with in the future. I think a number of different legislatures around the country are going to discuss that. And I think there are going to be certain cases, court cases, that will go through the process that will ultimately decide this in some cases. I think, ultimately it becomes a pretty simple equation, but you never know how things are going to get ruled on in court systems, and you never know how legislators are going to take a certain position a certain way on something. So it will be interesting over the short haul and the long haul to figure out what ultimately the state of play is currently for business interruption. And then certainly going forward, there will be a new paradigm in terms of making sure that that language is specific in a policy, whether that peril is a covered peril or not a covered peril. Additionally, there's been some activity at the federal level. House Resolution 7011, the Pandemic Risk Insurance Act of 2020, was introduced by Representative Carolyn Mahoney and 20 co-sponsors in May of this year. If it passes as was currently drafted, the act would mandate that insurance companies offering business interruption must cover losses due to pandemics. It was all established something called PRIA, and the Pandemic Risk Reinsurance Program, or PRRP, within the Department of Treasury, under which private insurance companies and the federal government would share the responsibility to pay claims for covered losses. The act would apply to any outbreak of infectious disease or pandemic on or after January 1st, 2021, that prompts an emergency declaration under Public Health Service Acts and is certified as a public health emergency. Participation in the pandemic reinsurance risk program would be voluntary for insurance companies, but it would be mandatory for them to cover defined public health emergencies under their business interruption policies. This is very much modeled after and very much like TRIA. The PRRP would be triggered if the aggregate industry insured losses for particular insurers were to exceed $250 billion. Otherwise, the federal government would have no obligation to pay under the program. There's also a cap on federal funds that would be available under the Act if the aggregate losses are of a certain amount. Under the Act, the insurer's deductible would be set at 5% of the insurer's direct earned premium during a preceding calendar year. And once the event's triggered by the aggregate losses and a participating insurer has paid the required deductible, the federal government paid 95% of the remaining amount of insured losses. Will it pass is unknown at this time. Obviously, there's an election going on, if you haven't heard about that, and things are moving fairly slow in Washington. How similar whatever passes, if it does pass, would be to TRIA is unknown at this time. But unlike terrorist attacks, pandemics are not limited in geography, reach, and may be uninsurable in some people's mind, at least. With regard to reinsurance and what's going on in that space, obviously reinsurers are primarily responsible for a lot of the larger losses out there. Models have played a really significant role in helping the insurance industry to assess the impact of infectious diseases for some time now. There are three main types of models that are used today. There's the scenario-based models, which assess the mortality impacts under extreme conditions. A benchmark scenario is the reoccurrence, say, of the 1918 pandemic, which is the worst pandemic from a mortality standpoint over the last 100 years. While scenario-based models stress test the financial implications under alternative scenarios, and they do so without assessing the likelihood of such events, that creates a certain scenario that requires the analysis to be done by actuaries, and therefore the actuarial organizations believe these types of scenarios make a lot of sense to look at how these losses will ultimately play out. Statistical models a little bit different. They leverage the frequency and severity of historical events to determine the mortality distribution of future events. A limitation of the statistical fit is that there are only a few data points on pandemics over the past century. If you're looking at earthquakes, hurricanes, tornadoes, things like that, statistical models are great because you have a lot of data points. But here, you don't have a lot of data points. In addition, these models don't easily allow for an evaluation of the impact of different intervention strategies, such as preventions and vaccines. And so there's infirmities in both of those. The last model, the epidemiological model, I always have a hard time pronouncing that, is used to understand the transmission and dynamics of infectious diseases and the impact of interventions on disease spread and mortality. Bottom line is you've got several different models that are going to be used to try and figure out what the cost to society here is, and in most cases, or in the instant case here, to the insurance industry and ultimately to the reinsurance industry. So those are some of the moving parts as it relates to the situation that we find ourselves in of COVID-19 and the country being shut down in large part for the last 6 months or so. In addition, I think we all know we've got wildfires going on in the West. We've got the hurricane that just hit the Gulf Coast, as well as several other hurricanes in the Atlantic. We've got the derecho that hit the Midwest, which a lot of people don't even know about, but caused somewhere in the mid-teens of damage to properties out there. And so we thought today's discussion on what was going on with COVID and some of the industry and regulatory responses would be timely. I don't know if we have any questions, if anyone could see those and ask those. For some reason, they're not popping up on my screen. Greg, do you see any questions?
No, there are not any at this point. The only comments made thus far were about the clicking, and that went away. So, but there are no questions. So if anybody has them, go ahead and post them and we'll try to answer them.
Yeah, I'm not seeing any questions, guys. Oh, wait, I do see one.
Here's one. Okay.
There you go. How's Florida handling the request for background documentation with courthouses having limited or no access?
Most courthouses have those documents online these days, and we've not seen any big problem with that thus far. It's not come to my attention anyway. So if it's been a problem, it's been a minimal problem. Otherwise, someone would have been screaming at me. So we're working through it.
I have to admit, Fred, I had my questions about whether we could get a regulator, a lawyer, and an industry person through all of the questions and all covering the ground that we've covered in the last hour in an hour. But amazing job. Can't thank you guys enough. I'm going to do my little wind out to the webinar, but if there are more questions, feel free to type them on in. This webinar has been recorded and will be posted to the SILA Foundation YouTube channel in the next couple of weeks. You will be receiving a post-webinar survey in your inbox, so please be sure to fill that out and provide some candid feedback. It really helps us to improve going forward. SILA Foundation provides these webinars free of charge as part of our mission and outreach. If you learned something of value today, please consider a personal or corporate donation to the foundation. We really rely on those to keep programs like these webinars going. I'm going to send one last shout out to Greenberg Traurig for supporting the SILA Foundation and sponsoring today's webinar. Thanks for joining us. Come back next month and enjoy the rest of your day. Thanks, you guys.
Thank you.
Thank you.